Welcome to this explainer. Today, we're diving right into a massive, frankly unprecedented shift that's currently shaking up the global memory chip market. We're talking about severe supply crunches, huge geopolitical ripple effects, and the sudden explosive rise of a major new player. Look, if you follow the semiconductor space, you already know it's volatile. That the dynamics playing out right now, they are literally reshaping the foundation of global tech. So, let's set the stage. The entire world is stuck in this massive semiconductor bottleneck right now. The AI boom has created this insatiable thirst for computing power, and even more importantly, the memory needed to sustain it. Which brings us to the big question. Who is actually going to fuel this AI memory crunch? Because the traditional powerhouses, they're totally maxed out, and that vacuum is pulling some unexpected new champions right into the spotlight. Here is our roadmap to break this all down. 1. The global memory crunch. 2. CXMT's explosive rapid rise. 3. Securing the home advantage. 4. Challenging the Korean giants. And 5. China's broader chip shift. Okay, Section 1. The global memory crunch. Now, you all know the basics, but just as a quick refresher on the tech at the center of this storm, we're dealing with DRAM, Dynamic Random Access Memory, and its heavy-hitting cousin, HBM, or High Bandwidth Memory. For AI services to actually do their thing, they absolutely rely on these complex memory systems. Modern data centers simply cannot run high-performance AI workloads without them bottlenecking. These chips are what allow systems to essentially remember information and stream that reasoning back to you instantly. Because these components are so critical, the financial stakes right now are just mind-blowing. The AI upcycle is pushing demand straight through the roof. UBS is estimating the global memory market will hit $786 billion this year. And by 2027, we're looking at a potential $1.2 trillion market. To put into perspective just how starved the world is for memory right now, DRAM contract prices surged by roughly 95% quarter on quarter in just the first quarter of 2026. That is massive. Moving on to Section 2, CXMT's explosive rapid rise. I want you to just think about this number for a second. 719%. That is the jaw-dropping year-over-year revenue increase that China's Chongshin Memory Technologies, or CXMT, pulled off in Q1 of 2026. In just one single quarter, their revenue hit 50.8 billion yuan. They have essentially ridden this AI memory wave to a level of growth that is almost unheard of. And to really grasp what that 719% jump means, look at how their bottom line flipped. Just a year prior, in Q1 2025, CXMT was sitting on a 2.8 billion yuan loss. Fast forward to Q1 2026, and bam, a 35.4 billion yuan profit. We are talking about a perennial loss-making company transforming literally overnight into a highly profitable powerhouse with roughly a 70% profit margin. Because of this absolute surge, CXMT is now officially the world's fourth largest DRAM maker. Naturally, they are striking while the iron is hot. CXMT is gearing up for an IPO on the Shanghai Star Market, which is already cleared review. And they aren't playing small. They're aiming to raise 29.5 billion yuan, which is about 4.2 billion US dollars. This is slated to be the second largest IPO on the Star Market since 2020. This massive pile of cash is targeted explicitly at expanding production and accelerating their development of advanced HBM3 tech. Section 3. Securing the home advantage. Even before this blockbuster IPO drops, CXMT has been busy locking in guaranteed revenue. They recently inked a monumental supply agreement with Tencent worth more than 20 billion yuan. That's roughly 2.94 billion US dollars. It's a 3 to 5 year deal to supply DRAM chips for Tencent servers. With hyperscalers globally scrambling to secure memory, getting this massive commitment is a huge endorsement from one of China's biggest tech titans. So how do they actually meet the demand of a multi-billion-dollar contract like that? Well, they're building, and fast. Step 1 is running their existing fabs in Hefei and Beijing, which pump out about 300,000 wafers a month. Step 2 is constructing an entirely new DRAM plant in Shanghai, right alongside a facility they already have for HBM packaging. And Step 3 is the ultimate goal here, effectively doubling their total output to 600,000 wafers a month. Section 4. Challenging the Korean giants. Historically, as we know, the global dream market has been totally owned by the big three, Samsung, SK Hynix, and Micron. But check this out. In the first quarter of 2026, CXMT's global market share more than doubled year over year, hitting 8%. They went from 3% to 8% in a year, successfully carving out a very real slice of the pie right under the incumbents' noses. Now, you might be wondering, how exactly are they pulling this off against such established Korean leaders? It boils down to a massive divergence in strategy caused by the AI boom. The incumbents, like Samsung and SK Hynix, are laser-focused on churning out highly complex, high-margin HBM and advanced server DRAM for top-tier AI. But by pivoting so hard to the extreme high-end, they've left this incredibly lucrative gap in general-purpose DRAM. We're talking about the chips that go into everyday PCs and smartphones. CXMT saw this gap and pounced. They are flooding that void with their general-purpose DDR5 and low-power chips, using a high-volume, aggressive pricing strategy. There's a great quote from a semiconductor industry official that really hits the nail on the head regarding this irony. They said, "The paradoxical situation where AI demand is opening growth space for Chinese memory companies is unfolding." It's wild, right? The exact same AI boom that's pulling the Korean giants upward into advanced processes is the very thing handing Chinese latecomers the perfect opportunity to swoop in and grab massive market share in general-purpose memory. Which leads us to Section 5, China's broader chip shift. CXMT isn't operating in a vacuum. This is part of a much wider systemic push. When you look at the macro data, China is systematically increasing its global share across multiple different chip segments. They've moved from a 6.4% global share in 2020 to 8.6% in 2024. Driven largely by the pressure of export controls, Chinese firms are prioritizing long-term resilience and accelerating localization wherever it makes commercial sense. A perfect example of this is YMTC. While CXMT is dominating the DRAM narrative, YMTC is China's heavy hitter in NAND flash memory. They've already snagged about a 13% global share of the NAND market, and their trajectory looks awfully familiar. YMTC also saw revenues double year-on-year in Q1 2026, hitting over 20 billion yuan. And yes, they're also filing for a massive STAR Market IPO to fund their own aggressive expansion. Stepping back and looking at the timeline, the momentum is undeniable. In 2024, China accounted for a massive 42% of all global semiconductor equipment spending. They were stockpiling tools, building out fabs. Now, in 2026, we are seeing the financial payoff, with these huge IPOs from CXMT and YMTC arming them with the capital to scale. And it's all building toward a very specific goal. By 2030, China wants to reach 50 to 60% domestic chip self-sufficiency. So what does this all mean for the broader tech ecosystem? We are watching the global semiconductor supply chain fracture into a structurally bifurcated system. The AI boom is raising all boats, sure, but it's splitting the waters. As we look at the future of compute, it leaves us with a critical question. Will the next decade of the AI revolution be fueled strictly by the established global incumbents, or are we going to rely just as heavily on this well-funded, highly motivated new wave of localized champions? It's a massive shift, and it's going to redefine the industry for sure. Thanks so much for joining me on this explainer, and I'll catch you next time.